All right. What's up, tycoons? What's up, traders? Coming at you guys with an update on Iotex. We're looking at the daily chart as always, breaking down ticker symbol IOTX. Now, I gave some key major levels in the last video, as well as some bullish price targets we could potentially hit. But we're coming down and testing our major levels right here. We're going to break down why I have all of these, what we're going to need to see happen for us to possibly hit those bullish price targets, and really explain the whole methodology behind it. So that way you guys can understand trading is like going to battle. It's like going to war. You need to have the proper weapons at your disposal and know how to use those weapons so that way you can increase your odds of success on the battlefield. So with that being said, make sure to smash the like button and subscribe to the channel if you guys are new, and we're going to jump straight into it. Now, the first thing I want to highlight is these circles right here. So obviously we have a high and then a higher high, right? The token is going up in price. But if we take a look at our RSI down here, which stands for the relative strength index, this is going to measure the relative strength of a token at its given price. So if the token's going up, you should see the relative strength index going up as well generally. But in fact, we actually get a divergence. That occurs where we're having a high, right? And then we're making a lower high at this point as well. And you can see that we're actually in a downtrend, losing relative strength as the token was increasing on relative strength. And I said, hey, this is a bearish divergence, okay? And this means that we could see some bearish activity in the future, right? In the short-term future. And sure enough, we have started to pull back, but we're doing a really good job of holding our 50% retracement level. Now, if you're not familiar with those, these right here are the three Fibonacci retracement levels, okay? The 38.2, the 50%, and the 61.8% level. Now, these in specific are the three most common and well-respected. There are some other levels to look at when it comes to the fibs, but generally speaking, these are going to be the three most common and well-respected, right? And we use these because nothing moves in a straight line down or in a straight line up. Rather, you get a move up, retracement, continuation of the trend, right? Or you get a move up, retracement, consolidation, and then you break through those retracement levels and you can spot a potential downside reversal. That is why it specifically says bearish below right here. Because if we break below our 61.8% retracement level and flip that to resistance, most likely we're going to come back down and retest some of our previous lows. Okay, but we're doing a good job now of holding the 50%. As I mentioned, that level specifically is going to be 0.02715. We really want to stay above there if we want to see any chance of continuing back up higher, retesting some of our previous highs in our overhead supply zone. Okay, so that's why we're using these three levels, and that's how we use them. Now, the 61.8% level is going to be 0.02514. So ultimately, that's kind of going to be our line in the sand. If we flip that to resistance from support, then we could be heading much lower. And as I mentioned before, retesting some of our previous lows. Now, take a look what happened here. Okay, so I mentioned that if you're going to be looking for a bullish breakout on Iotex, right, what you're going to need to see is a break of this bearish divergence trend line. Notice how each time we've rejected it, we've pulled back a little bit, right? We rejected it here, started to pull back. We rejected it here, started to pull back. And then we rejected it again over here and pulled back yet again. Now, the more times you test a trend line, the weaker it gets. So we do have the possibility of breaking out of this trend line, but ultimately what we want to do is flip this level from resistance on our RSI to support. So if we do get a breakout, we want to ultimately maintain above that trend line and either move sideways or possibly even move upwards. All right. That's what we're going to be looking for. Okay. So markets like to move in 5-wave or 3-wave structures. So I'm tracking a larger 3-wave structure right here. And after we hit our first price target up here in our supply zone, which all this is this is really just an area of imbalance. Okay. And in this case, there's a supply imbalance. A supply imbalance just simply means that there's an imbalance of sell orders. Right, there's far more sell orders in this area than there are buy orders, and that ultimately pushes the price down lower. Now, as time goes on, these sell orders start to get fulfilled. Okay, so over here, that imbalance was there, and we had a bunch of sell orders get filled quickly and push price lower. To break through this zone, we really want to come up here and consolidate a little bit and absorb these sell orders in here. and create the potential to really fill all those sell orders and have new buyers come in and push the price up higher. All right, that's what we're going to be looking for. Now, this zone in particular is going to be from 0.034 all the way up to about 0.038. Okay, that's roughly going to be the overhead supply zone. And if we can break through that supply zone, we can possibly hit our bullish price targets to the upside of 0.041, 0.044, and potentially even 0.049. Now, there's a lot of work to be done, okay? We really need to break this bearish divergence trend line, all right? We need to stay above our major retracement levels and break through this supply zone, okay? We could still be in an uptrend if we end up putting in a high and a higher high and a higher high and get rejected from our supply zone. Okay, that's definitely still possible. And at that point, we would have to adjust our Fibonacci retracement levels because we would have a new high, okay? And a new high is going to equal new retracement levels. So if that time comes, I will make an update on the video and give you guys the new major retracement levels that we need to stay above. But for now, we are continuing to break below them and test them, right? We tested our 38.2, bounced a little bit, ultimately broke below it. And now we're testing our 50%. So we need to keep an eye if we can stay above this or if we're going to break below and possibly come down and retest that 61.8% level. Hopefully you enjoyed this video and learned something new. If you did, smash that like button, subscribe to the channel. And with that being said, I'm out.